If you are like me as an author and are unsure of what things you can claim, you're getting ready to do your taxes and you don't know, did I miss anything? This is the right place for you. Carol Kopp joins us today, and she is a CPA advisor, author, podcaster. Her books include Business Tips and Taxes for Writers, which is available on Amazon. I'm so glad to have you here, Carol. Thank you so much for joining us.
Thank you. Welcome, everybody. All right. Are we ready to get started?
Yes, please.
I'm going to share my screen so you have something to look at. It just kind of helps concentrate too. Let's start out with talking about these new tax law changes for 2020. So here we are sitting here in early April of 2021, and there were some tax law changes, but usually they come before the end of a year, before December 31st. Nope. We had a new president. They put in some new tax law changes. Doesn't happen very often, but this one did. So some people have already filed their tax returns and then found out there have been some changes. So hopefully you've heard about some of these. Well, the biggest change is we get an extra month. The due date was pushed back from the typical April 15th, 16th, or 17th to May 17th of 2021. And that's to give not just us tax preparers and you taxpayers, but really to give the IRS more time to get their systems up to date for some of the tax law changes that were implemented through what's called the American Rescue Plan Act, ARP, A-R-P-A, ARPA. We always come up with acronyms for tax bills. I don't know why, but this is ARPA. It was a huge bill, and probably 50 to 75% of it does not affect individuals, but part of the bill does affect individuals. That's all I'm going to highlight here in this slide tonight. One thing I do want you to know, if you haven't already prepared your 2020 tax return, the software or your tax professional, whoever you use, will ask you about those economic impact payments. Sometimes we call them stimulus payments. They're going to ask about those. So make sure you have ready, and if you have to go back and look at your checking account or something like that, how much money did you get for the first stimulus payment? How much did you get for the second stimulus payment? And if you didn't get the full amount you were entitled to, your tax software will walk you through some of that. But that kind of took me by surprise when I was preparing a family member's tax return, like, oh shoot, I forgot to ask what were their economic stimulus payments, 2 that were received in 2020. Then we got another one in 2021, mid to late March. That we will report a year from now.
Okay.
Got it? That's how tax returns work. We're going to be talking about what happened last year in 2020, but we're here sitting here in early 2021 preparing the tax return for the previous year. One of the biggest changes that may or may not affect some of you, but affected some of my clients and my family members was unemployment benefits were not taxable. Normally, if you collect unemployment, you have to pay tax on it. You have to record it on your tax return just like it's a W-2. But in order to give some relief to unemployed people, unemployment benefits are not taxable in 2020, up to $10,200 per person. Sweet. So my daughter had a period of unemployment during the lockdown, about 6 weeks. And I remember telling her, honey, you may owe taxes because of that unemployment. Nope, she doesn't. She's really pleased that she's getting a pretty nice refund. So I want you to know about that. The IRS says if you already filed your tax return and you didn't know about this, and actually, it only became law maybe after you filed the tax return, the IRS says, please don't flood us with amended tax returns. Please don't do that. We'll know on your tax return that you had unemployment benefits. We'll send refund checks. Don't worry, is what they've told us. Of course, we don't know how long it'll take them. They're kind of busy right now, so be patient. If you have children under 18, used to be under 17, your child tax credits have gone up $3,000 per child. And if they're preschoolers, I think under the age of 5, you get even more, $3,600. Dependent care credits, if you use daycare, that went up. Wow, just those kinds of things. If you already filed your tax return and didn't get those, the IRS should be able to adjust that kind of stuff, but keep an eye out for that, okay? And then this is something new too. Charitable deductions are what we now call above the line, up to $300. So a couple years ago with the Tax and Jobs Act bill, fewer people itemized deductions, meaning they couldn't take a charitable deduction. And the reason fewer people itemized deductions is because the standard deduction went way up. So more people started taking the standard deduction. That's great, but then they didn't get credit for the charitable deductions. So only for 2020, you can take up to $300 for for donations that you give to charities in 2020. It's also to encourage you to give to charities. Of course, it's a little late because this only came in 2021, but if you have been generous in 2020, make sure you get that $300 deduction. It is on line 10B. Look for it on the 1040. And if you haven't claimed it, go ahead and claim it, or tell your tax professional or pop it in your software. I made charitable donations. Okay, so those are some of the highlights of the big changes that came in early 2021 under the American Rescue Plan Act. There are more, but these are the important highlights I thought I'd better tell you about. All right, tax deductions. So this is the bottom half of the Schedule C. And I know you don't like looking at tax forms. I haven't met too many authors who like looking at tax forms. The top half, which I didn't show you here, it's where you put your income. But here's what we like to focus on. And the area in yellow are all the different ways you can take expenses. Now, this form is used by every type of small business imaginable. Okay, I use the same form. Authors use this form. Everybody uses this form. So understand that when you do your tax return, you will probably use 3 of these blocks, 3 of these lines, 3 to 5, probably about it. Okay, there's a lot on here that does not apply to you as an author at all. And if you look through them, you probably don't even know what some of these mean. But advertising, we got that. We know what advertising is. Your website could go in there too. Car and truck expenses, that if you have mileage, if you're driving around. Yeah, okay, we get that. Number 10, commissions and fees. Maybe you're not paying anybody on commission. Probably, I don't think so. Number 11, contract labor. That's where your illustrators, your editors, anybody you hired as an independent contractor to help you, that's where that goes. Number 12, depletion. Nah, depletion has to do with natural resources. If you're in the mining business, or timber, okay, no. And we can go on down. You probably don't have employees, probably don't have a mortgage. I'm down to line 17. I'm skipping over some, right? Legal and professional services. If you hire an attorney or a CPA, they go there. Legal and professional. I wish they call it legal and accounting, because they say any other professionals, like your illustrators are professional, your editors are professional, but they go under contract labor, whatever. Okay. On the second column, office expense. Yeah, we know what that is. Okay. That's any software too that you might have, that you're renting, and that you have repairs, and that you have blah, 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 blah. Travel. I'm hopping down to line 24. Yeah, well, pre-pandemic, you might have traveled. Maybe in 2021, we'll get a little travel expenses. I don't know. Line 25 says utilities. Cell phone and internet can go there. They're utilities, but they have to be prorated for the business portion only. So if there are 4 people in your house and you're all using the internet, maybe only 1/4 of it is your use of the internet. Okay, so maybe you can take 1/4 of the internet service fees that your family pays for. Got it? Same with your cell phone. Oh gosh, I had one business client. He had very, very tiny business. Seriously, less than $1,000 or $2,000 a year. And he wanted to deduct his whole cell phone bill. It's like, no, you can't. I'll let you take 10% of your cell phone bill, because I think that's all. You probably had 2 or 3 calls a year. No, you're not taking your whole cell phone bill. You have to only deduct the part that is business related. Okay. Line 27A, other expenses. That's where you might put anything that doesn't fit anywhere else. The other big block of yellow down there, business expenses, the home. I'll talk about that in a minute. So here's a list of some of the most common deductions for writers, self-publishers. Some we already talked about. Advertising, mileage goes under car and truck expenses. The mileage rate changes every year. We can talk about keeping a mileage log if you want to. Office expenses, that can be your software, obviously pens, ink, printers, stuff like that. Travel expenses, cell phone and internet. I touched on that. Prorate it for your business portion only, please. These last 3, professional development, book publishing expenses, and research, they all might go on that other line. Like research, if you bought books to understand how to publish, that might go under professional development or might go under research. Book publishing expenses, like, I don't know, when I first started, Amazon charged a fee. I think they waived that. I had to buy the, sample copies of the book to make sure they did their printing right, things like that. If it's actually an independent contractor you're hiring, put that under contract labor. But Okay. When you sign up for my newsletter on my website, Taxes for Writers, I wrote an ebook where I go into much more depth about each of these areas of business deductions. One I did want to touch on is the home office deduction. So if you use your home office or, a part of your home, it can even just be a few square feet in a room, it doesn't have to be a separate room. You use it regularly for your business and exclusively for your business, you can now deduct business use of the home, $5 per square foot. So I'm sitting in my office. It is a bedroom that I took over and became my office. When my kids were at home, it was not exclusively my office. They would come up here, they would use my computer, the printer that was, it was my office, but it was not exclusive. After they left for college, my business is the only thing really that happens in this room. Well, except for that closet, I store suitcases, so I don't take that square footage, okay? I take the square footage of this room, multiply it times $5 a square foot. And I think my home office deduction is about $840 a year that I get to deduct because this is my home office. Exclusive use is very important. So if you're working at your dining room table, nope. Unless you have carved off and no family members ever enter that space. Okay. There's some maximums. I put there 300 square feet of $1,500, but I want you to know about that. And this $5 per square foot is just such a nice, easy way to calculate it. When I first started, they made you do quite a complicated, had to keep track of all your utilities and your mortgage, and it's crazy. So $5 per square foot. Sweet. The IRS sometimes makes things simpler. This is a fairly new deduction. It started under the Trump administration, 2018, I think, the qualified business income deduction. I love this deduction, the QBI. I love it because what it is you take 20% of your profit from your business and you just get a big old tax deduction for it, 20%. And so the reason the Trump administration did this is because they lowered the corporate income tax rates for corporations. And the small business owners were saying, where's our tax break? So this is where they put it. Basically a 20% reduction in the tax you owe just because you have a business, a qualified business, okay? There's a lot of caveats of who can take this and who can't, but CPAs can take it and authors can take it. That's basically all you need to know right now. There's some restrictions if you're too wealthy, if your taxable income gets too high, $163,000 for a single person and $326,000 for a married person. You can't take it. This is fairly typical if you get up to high income levels. The Congress doesn't deem it possible for you to take some of these deductions, but most of us are way below those income levels. So I want you to know about this because I want you to pull out your tax return for 2019 and 2020. I can't remember, maybe even 2018. I'm sorry, I'm losing track of years here. How many years this has been around, but it's fairly recent. And look at line 13. This is on the 2020 tax return, line 13. I think last year it was on line 11 or 12. They tweaked these tax forms a little bit. Look for this qualified business income deduction. All right. So you can see it's right below where you pick your standard deduction. Look for it. Make sure your software found it for you because my software doesn't automatically pop it in. It doesn't automatically calculate the 20% of my profit. I have to go in a little more deeper into my tax software, retype in what my profit was, and then it gives me the deduction. So if you didn't know about this, and you can see it's not really like highlighted in any way. Sometimes the software tells you had a business, about the qualified business income deduction, and you may not have ever heard about it before. So go ahead and pull out your previous year's tax return, see if it's there. If it's not, start Googling, how do I amend my tax return so I can get this? Okay. Software usually takes care of it, but you got to make sure software should be helping you if it's only as smart as the person using it. Or if you got to know about it. Okay, this is what I mentioned on my website, taxesforwriters.com. There's a little box you can fill in your email and you can get that ebook, Tax Deductions for Writers. It goes, I forget how long the ebook is, not very long, 10 pages maybe, but it goes into a lot more depth about what kind of deductions writers, self-publishers in your case, can take. And I think it might be helpful to you. Okay, this is my book, Business Tips and Taxes for Writers. These are all the things it discusses. Here's my website and my email again. I do phone consultations with writers about their business and also like this, writers groups, virtual visits.
Great tips. This is a wonderful opportunity for all of us authors here. And I do recommend that everyone go check out and make sure that you're grabbing those free tools from Carol in her website. So go ahead and spend some time. It's a wealth of information, and you will save lots of money later with all of the information that you're learning. Carol, thank you. We
Everybody,
appreciate you.
thanks.
Have a great weekend.
Thank you.
Bye,
Thank you
everybody.
so much.